Hello and welcome to our channel. Today we have an exciting topic to discuss: options trading for beginners, the basics. If you're new to the world of investing and want to explore different strategies to grow your portfolio, options trading can be a powerful tool. In this video, we'll cover the fundamental concepts of options trading and provide you with a solid foundation to get started. So let's dive in. Before we get into the specifics, let's understand what options are. Options are financial derivatives that give traders the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specified time frame. The underlying asset can be stocks, indices, commodities, or even currencies. There are two types of options: calls and puts. A call option gives the holder the right to buy the underlying asset at a predetermined price, known as the strike price before the expiration date. On the other hand, a put option gives the holder the right to sell the underlying asset at the strike price before the expiration date. Now that we know the basics of call and put options, let's discuss some key terms you need to be familiar with in options trading. First, we have the strike price, which we mentioned earlier. It's the price at which the option can be exercised. Then we have the expiration date, which is the date when the option contract expires. It's important to note that options are time limited, unlike stocks that you can hold indefinitely. Next, we have the premium. This is the price you pay to buy an option. The premium can vary based on factors such as the volatility of the underlying asset, time to expiration, and market demand. It's crucial to consider the premium as it directly impacts your potential profits and losses. Now let's talk about an important concept called in the money, at the money, and out of the money. If the current price of the underlying asset is higher than the strike price of a call option, it's considered in the money. If the current price is equal to the strike price, it's at the money. And if the current price is lower than the strike price, it's out of the money. Once you grasp these basic terms, you can start exploring different options and strategies. There are numerous strategies available, ranging from simple to complex, but we'll cover a few common ones today. One popular strategy is the covered call. It involves selling a call option on an underlying asset that you already own. This strategy allows you to generate income from the premium, while potentially earning profits if the price of the asset remains below the strike price. Another strategy is buying a put option for downside protection. If you own an asset and are concerned about a potential price decline, you can buy a put option to limit your losses. If the price drops, the put option gains value, offsetting the losses from the underlying asset. While options trading can be lucrative, it's essential to manage your risks effectively. Options involve leverage, which means a small move in the underlying asset's price can result in significant gains or losses. It's crucial to have a clear risk management plan, set realistic expectations, and start with small position sizes until you gain more experience. And there you have it, the basics of options trading for beginners. Remember, this video is just a starting point, and there's a lot more to learn as you progress on your options trading journey. Take your time to study and practice before committing real capital. We hope you found this video helpful. Don't forget to like, share, and subscribe to our channel for more informative content. Happy trading!